Investor Services put 6 U.S. banks on review this week for potential credit rating downgrades in the wake of the Silicon Valley and Signature Bank collapses. Moody's warned First Republic Bank, Zions, Western Alliance, Comerica, UMB Financial, and Intrust Financial could be headed toward the deep junk category. Shares of the regional banks experienced massive losses on Monday. Moody's expects more banks to struggle, particularly those with extensive amounts of uninsured deposits and long-term Treasury bonds. Greg.
The collapse of America's 16th largest bank is under investigation by the Justice Department and the Securities and Exchange Commission. The selling of stocks by Silicon Valley Bank top executives just before the failure is a specific concern. The Washington Times reports Republicans accuse President Biden's high spending and the Fed's numerous interest rate hikes as major contributors to the bank's collapse. SVB's board of directors include prolific contributors to Democrats. The New York Post says the Democrat alignment was part of the bank's overall strategy. Tim?
Let's talk with the founder of Alpha Investor and host of the Charles Mizrahi Show, Charles Mizrahi. Welcome back, Charles. It's good to see you, sir.
Likewise. Thanks for having me.
All right. The Department of Justice is investigating SVB now. When you see executives sell stocks and pass out bonuses just before running off the cliff, does it make you suspect of their practices?
Well, it's certainly not a good look, right? It's certainly not something that one should be doing, and not expecting people the investors to think that there was something that they knew or are acting in a way that they just jumped ahead of the public. So it's not a good look. It's not a good look for the company.
All right, 4 major banks, including J.P. Morgan and Bank of America, donated over $60 billion, billion with a B, to BLM and other woke causes. What in the world does this have to do with sound investing in banking?
Seems to be nothing, right? It's basically trying to appease or just keep a certain segment of your marketplace happy. Look, at the end of the day, they can do what they want, but they have to realize they have to answer to shareholders, and it's up to the shareholders to call the company to account. So if you're a shareholder, you have a vote, you have a say, and if you're a shareholder of one of these banks, you should definitely have a say if it goes against your beliefs and what you think the company should be doing with your assets. Because owning a stock is owning a piece of a business, and you are a part owner. So shareholders should be more active and more vocal in how management spends or invests or donates their money.
Charles, you recently reposted a very telling graph showing ARK Fund's terrible performance versus their ability to take massive fees from investors. They say their strategy is investing in companies that cause, quote, disruptive innovation. What's your review of their strategy?
Well, that's basically it. They like to find, Kathy Wood likes to invest in a lot of innovative disruptors, companies that are changing the world. But the problem is these companies, and many of them, were not making money. In fact, they had a huge cash burn, and eventually it came back to haunt and destroy shareholder value. So for those people who did invest on the assumption that the world will be better because these companies have all this innovation, at the end of the day, it comes out to how much money does a company make? Because a stock, as I mentioned, is a piece of a business. And if the business is not doing well, eventually the stock price will fall in line with the fundamentals of the business rather the other way around.
Charles, this is Greg Stevens. We've heard much about the Silicon Valley Bank failure. Signature Bank is the other one that failed. I was shocked to hear that former Congressman Barney Frank sits on the board. How's that possible after what we experienced in 2008?
How's it possible that he's on the board? Well, they pay him a nice, I think it was 120 or 150,000 plus stock. So the guy was making close to $300,000 a year to go to around 4 or so meetings a year. That's just the name of the game. Politicians and leave and they go sit on boards, and money seems to override a lot of political belief and long held virtues that they have. Because at the end of the day, they're looking to make money. So, it's capitalism. Why would he sit on that board? What was he doing? What was he supposed to? I don't know. Richard Rubin back in, I think it was 2008, was on the board of Citibank, and they didn't do well during the financial crisis. And so it's just the name of the game.
So where was the Federal Reserve Office in San Francisco, which has oversight over SVB, and why not sell this bank off rather than have the government take it over?
Why not sell it off? Well, there's a bigger issue, right? So first of all, from what I understand and what I'm seeing now, there is no taxpayer money involved. This is FDIC insurance that banks pay to insure their deposits. So that's what's being used here. The problem here, it seems to me, there would have been a systemic risk because you mentioned 4 or so banks or 6 banks on Moody's list. There would be more and more of it as people just take out their money out of regional banks that who have more than $250,000 and keep moving it. It would have been a bigger issue, especially Monday morning if depositors weren't able to access that money. They wouldn't be able to pay salaries and so on and so forth. So it would have been a big deal.
30 seconds right here. Do we panic right now in the market or hold tight?
Well, if you trade based on a day-to-day basis, panic, be euphoric, do whatever. But I don't. The simple answer is you shouldn't. If you own quality businesses that you bought at attractive prices, and you see yourself as a part-time owner, as a owner of a business, because that's what you are, little blips like this, panics, crisis, they will pass, and the fundamentals of the business will make you the money, not short-term trying to guess where the market's going.
That's why I love talking to you. CharlesMizrahi.com is where you can find out more information. Charles, thanks for being with us today.
My pleasure. Thanks.